I made £10,000 last month using nothing but pure price action. No indicators, no complicated system, just raw price movements on my charts. Most traders are doing it completely backwards. They load up their charts with RSIs and MACDs, moving average, but by the time these guys give you a signal, the smart money has already made their move. And I went from blowing trading accounts to consistent profitability once I discovered these price action secrets. And today, I'm going to show you exactly what I look for before entering any trade. And these aren't just theories, they're the exact techniques that help me quit my 9 to 5 and trade for a living. Now, I've been trading for over a decade and I've made every mistake in the book, and I don't want you to make the same mistake. So let's break down the things you need to do so you can master price action. So we're going to head over to the charts and let's begin. So as you can see here, I've got a chart. All right. And again, I've always said this many, many times. A chart could be very, very overwhelming at first, especially for beginners. Intermediates get a bit comfortable with it, and advanced, they don't really care about the charts because a chart is just past data. Now, as a technical analyst, your job is to use this past data to speculate forward. I'm going to take it back a little bit, and I'm going to start off with some of the techniques that you can begin, starting from a beginner, moving to advanced. So there's going to be a process to this. So number one, the first thing I want you to do is get a line chart. So if your chart is a bar chart, a line graph, what it does, it takes each closing price of each bar and creates a line. So I'm on a monthly time frame, and the line graph is going to take each closing price, close, 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 and it's going to make a line graph. So it will look exactly like this. Now, I want you to start off doing a simple exercise. Just grab a trend line, okay? Now, again, this is just an exercise to begin mastering price action. Remember, this is what the video is about. And I want you just to draw lines and see how they connect, okay? And what you're going to identify is which one is right, which one is wrong, okay? If I draw a line from there to there, or I can draw a line from high to low, just so we're using these trend lines as either a support of the trend or resistance. Now, when I first saw this exercise, I remember I was like, well, what's the point of this? I'm just drawing lines. Now, the reason why I'm doing that is to get familiar at identifying one thing. And the key thing I want you to start getting better at analyzing is, where is the last reversal? So as you can see here, I've just drawn it. There's no right or wrong way. Just draw what you see, okay? Now think about what I just said there. Where is the last reversal? So the easiest way to identify trend is to identify what is the current trend. Let me explain. See, most people think you have to go all the way back. I've got all this data and I can draw a trend line all the way from here to here. But that doesn't touch it. Now, how do I know if that's right? Right? It's subjective. I could draw a trend line from here to here. I could draw a trend line from here to here. It's an illusion, isn't it? I can make the chart look like however I want. I remember a great mentor of mine told me, he goes, sometimes a chart, you can make it look like a buy and you can make it look like a sell, and you'll sit there and scratch your head. So one method I always learned was, where is the last reversal? Get better at identifying reversals. Now, what's a reversal pattern to me? Let's head over to the whiteboard and let's have a look. So I'm sure some of you are aware of this pattern. Market goes up, down, right? These are known as higher highs and higher lows, okay? And you can draw a line there. Now, a simple reversal pattern is where the swing, okay, this will be known as a swing, gets broken and gives us something like that, a lower low, okay? So it goes higher high, higher low, higher high, and then it gives us a lower low, and then a lower high, and then we're going down. And it's the same thing when we go from here. It's when the last swing gets broken. Now, most people as a beginner, when they want to master price action, they're trying to get this perfect. How do I identify the best move up? Where's it going to stop? The next move down? Where's it going to stop? Where do I get in? If we can just identify first these reversals, we can then focus on whether we should be a buyer or a seller, depending on the trend. Now, most of you might be thinking, what time frame should I do this on? Now, before we worry about time frames, let's go back to this exercise. Let's go to a new chart. Let's pick something like, let's pick gold, right? Now, we're on a monthly time frame. So all I want you to do is put a line to where you've seen a previous swing get broken. So if that is a higher high, let's just say, and we put a trend line here, right? And that was a higher low. What have we identified here? Market has made a big higher high. So could we define this as a reversal? Now, I know some of you in the video say, oh, but that could be defined as a triangle. That could be a pennant. That's a chart pattern. It could be a triple top. This is a retest. I don't care, right? Price action doesn't need to be complex. If you take the first question is, where is the last reversal? So I'm on a monthly time frame on gold, and where is the last reversal? It's broken to the upside. So what's the trend on gold? It's to be a buyer, right? Now I'm on a monthly time frame. We can carry on. But the next question goes to is, what are we analyzing for? So now that we've identified that we are in an uptrend on gold, which you can simply see, the next question is where do you buy? And that's when everyone starts panicking. So just quickly summarize there. Just look at where the last reversal is. So one of the things I do in one of my trading rooms is I get people to answer these three questions. Where's the last reversal? What's the current market trend? What phase are we in? Right? Let's write that down. Where is the last reversal? Number two, what is the current trend? And number three, what phase are we in? And what I mean by phase, are we in a move up, or are we in a phase two pullback? Or if we're going down, are we in a phase one up, down, or in a phase two pullback? Now remember, our job is to always catch the next phase one up or the next phase one down. That's all we're trying to do as a beginner. The easiest way to do that is to start where the last reversal is. So let's head over now to Forex. Let's go to a daily time frame, and let's go to the euro yen. So I want you to look at this chart. Where is the last reversal? Take your time. Grab a little trend line or use a rectangle tool. And as I go back, do we see a reversal pattern right here, guys? Yes or no? Higher high, higher low, higher high, lower low, lower high, lower low, lower high, lower low, lower high. So what is the current market trend? It's a downtrend. So what positions should we be looking for? Sell positions. Okay, so where do I get it? We're not going to focus on that yet. Now, look at this as a bigger picture. This is where bigger time frame correlation. If that move now has made a higher high, if we're taking that move, higher low, lower high, this move has taken out this swing. This also on the bigger picture tells me that the trend is down. And just get in the habit of identifying these reversal patterns, these reversal structures. Now, the reason I like to start with a line chart is so you don't get confused with all these wicks on the candlestick bars that most people tend to really struggle with, right? There's one there. And look, we've spotted reversals. Now, just take a second. Your job is to catch the next move, which is essentially these potential phase one moves, right? To make money in these phase one moves. So when you identify these reversal patterns, you are piggy banking on the next trend to the upside or the downside by identifying the last reversal. So here comes the next trick. Now, I've showed this in my other videos, analyze for the week ahead. So I like to use a period separator, which shows me each week. And let's say we're analyzing for this week. So this is the beginning of the week. What do you speculate that could happen based on this structure? In simple terms, you might think this is going to happen. Phase one, phase two, phase one. Now, there are tools and indicators we can use. We can put Fibonacci here. You could use stochastics here. You might move out. You might identify support and resistance. So this is then, once you start identifying reversals and you know what the trend is, you start adding in simple things like support and resistance, areas of where the market can react. That's how I identify it, areas of where the market can react. Now, if I put this as a level here, you can see as a closed price, it's just missed it. But if I move it to, let's say, candles, you can see the candle touched it. You can see the candle went lower. So remember, the line chart is just using the closed price, not the open, high, low, and close, just the closed price. So the reason we use a line chart is to condition our brains so we can get better at identifying reversal patterns. And when you ask these three questions as a beginner, right? Where's the last reversal? That will tell you what the current trend is. To bring it up to an intermediate level, I like to know what you're analyzing for. So analyze for the week ahead, right? Now we're leveling it up a little bit. So now, as we can see in the chart, analyze for the week ahead. Now, once you've identified these reversal areas, we can add support and resistance levels. Now, as you can see, that was the line chart. And if we start adding this, we start adding other levels to where the bars, high and lows are, which could start forming potential zones and have been interpreted as many different things in the technical world right now, as you see all over social media. You hear things like supply and demand, order blocks, order zones, liquidity areas. Look, I'm not here to badmouth anything. All method works, but just understand the foundation. It stems off basic support and resistance. Before we start diving in and advancing it and adding more methods into it, just get the basic structure right? Where is the last reversal? What is the current market trend? And where could the market potentially react? Looking at previous areas the current price could go to or is near. Because once we've done that, all we need to decide is what are we seeing this week and how are we going to act upon it? Now, the second part or third part, don't know where I am in this number, but I'm sure you're listening, is the candlestick bars, right? Now, I did a video on the one candlestick pattern you need. It'll be in the link below, so you don't have to go finding it. It is all about engulfings. Now, there are other patterns to it, but let's just begin here. If we look at this last reversal, this was a bearish engulfing. So that bearish engulfing indicated sellers are coming in with a reversal structure at an area where the market has resisted. It also made a double top pattern, a bearish engulfing, and if you add stochastics, it wasn't quite oversold, but you could see some patterns in here. We won't worry about that. Now, I know everybody wants to use stochastics or MACDs, and there are many ways to use it. At this point, I wouldn't worry, because you don't need it. They're lagging. Now, the closest thing right here is the bearish engulfing. And if you notice, the market then gave us indication to go down, down, down. Market pulled back up, gave us another bearish engulfing, and you could have made money piggy banking off the downtrend last week. Now, we are expecting the market to pull back. Now, with the price action techniques, this is where it could get subjective again. If we put a line chart, you might draw your Fibonacci this way from the close price, and this could react to any one of these levels. But if you're drawing it based on the high and the low, you can draw it from this high to this low, and you can see the levels are slightly objective. Now, the key thing here is if we look at the price action, this will be known as a potential 3 inside up structure, which means the market could be going up. Now, if I'm looking to use price action to give me an indication of the move down, and I've got these Fibonacci levels, I could use any one of these levels. All these levels are just where the market could react. What I'm going to look for there then is a candlestick bearish engulfing at any one of these levels. Now, if I'm just going to stick to the one time frame, the daily time frame, that then means that means sellers, that's going to be confirmation for me that sellers are going to be coming in. Okay? Let me explain. Let's use this example up here. So if we're analyzing for last week, okay, And this is what I've analyzed. I've analyzed a reversal structure based on breaking this swing and this swing. Then I expect the market could pull back. As the market pulled back Monday, Tuesday, Wednesday, it made a bearish engulfing. And then Thursday and Friday, you had 2 days to drop down to a lower time frame where you could potentially make money selling in the market. And if we go down to the lower time frame on the 1 hour, you can see the past 2 days, there were selling opportunities. So you're getting it now, right? When we get back to this, where's the last reversal? What is the current trend and what phase are we in? So if we go back to this, we know on a daily, we are potentially in a pullback phase known as a phase 2. Market could pull back to any one of the fib levels. Like I said in any of the other videos, you could use round psychological numbers. Market is near 157, and you might say, hey, the next psychological level is 158. Let's put 158. There. Can the market go to 158 and then back down to what's lower than this? 155? Right. If so, what am I going to look for? A simple break of structure, maybe on a lower time frame, or simply a bearish engulfing? Because we know that the current market trend is down and we're analyzing for the week ahead and we expect a pullback in the market here. And then we're expecting the market to continue down. Now, the key thing of why I say candlesticks are important, because when you're thinking about levels, everybody wants to trade off the level. But if you just let price action dictate and confirm it, then you just piggy bank on the next move. Makes sense, right? Why do you have to trade bang off the level? Like, what are you going to get rewarded for? Either way, I can make money with extra confirmation, increase the probability and piggy bank. Like I said, I made 10 grand at the beginning of this video. Or you could keep trying to get that perfect trade so you can show everyone who doesn't really understand it. Because when you start getting advanced, the only thing you need is just candlestick. That's the truth. That's how I truly feel about all of this. Then really what it comes down to is price and fundamentals. Because here we're looking at the euro yen. Which economy is stronger than the other? That's the fundamental question of what Forex trading is. And as we get advanced to this, you only need simple price action methods to get very successful in trading. Now that you understand these price action secrets, you need a powerful strategy to combine them with. So click here to watch my video on the next video where I show you exactly how to combine these price action secrets with my highest probability setup.